Today, we are continuing a topic that we have been talking about for the last 3 weeks. It is helping folks how to actually buy rental properties. We went over common first-time mistakes and how to rebound off of them. Then we went over how to overcome a fudged up deal sheet, right? It's kind of fudging season out there with this economy, and this economy. People are fudging the numbers all day long. But one of the most important decisions, in fact, the second most important decision, second only to team, is what market you invest in. So today we are talking about how you find the best market to invest in rental properties. Welcome, everybody, to a very warm edition of your weekly Not Your Average Investor Show. I am your host, Pablo Gonzalez. With me today in studio, back together again, Dream Team, is the guy that I affectionately like to call GC because he's got the genius concepts, knows how to generate cash flows, is a great co-host, and because his birth-given name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Fantastic to be with you all here today.
It's good to be back in studio, buddy.
It is so good.
I don't know if it was just like me being in the elevation in Colorado and how cool it was over there, but I'm already stressing.
You're sweating bullets over there.
I got a little, I don't know, got a little fan for me, but I'm
hot and bothered over there.
Yes. Today we've got a really special, it's not breaking news, but this is a giant update. GC, it was not too long ago, maybe 6 months ago, that we announced this Homestep partnership with JWB. And basically the TLDR is we talk a lot about how Jacksonville is this growing market, how there's this economic flywheel of change that is happening, that is raising median incomes, that is making the city better, that's building the city. JWB is a big part of it with building downtown. But we identified a big gap. Those that are not homeowners fall at risk of being left behind and from being plugged in to the economic flywheel. So JWB decided to do something about it. They launched Homestep program. You want to give us a little update on Homestep, GC?
100%. The Homestep program, it's only about 6 months old, like you mentioned, but it is already changing lives. And what the Homestep program is where our JWB residents, those who rent properties with JWB, simply earn $100 a month that now goes towards the purchase of their first home. And this is the only property management company in the country that we are aware of who basically pays our residents to not be residents anymore, to become homeowners. And so I wanted to give you just an update. We are super excited about it. Just 6 months in, and we've got a lot to talk about.
I want to hear about this, but first, you pay people to not rent from you, GC?
Yeah, how about that?
What's up with that?
Well, so, I mean, here's the deal. We are all about impact at JWB. We sit in the seat where we can impact a lot of different lives, from the investors, from the residents, from our community at large. And when we see an opportunity to make a big impact in one of those sections that we can really impact, that's what we're all about. So, for years and years and years now, we have been helping our residents become homeowners. But around middle of the year last year, we said, you know what, guys, what if we got really, really intentional about this? And that's where the JWB Homestead program came about. This is what hit me over the head when we were starting to put the plans together. The average resident has about $10,000 in net worth. And this is according to the Federal Reserve study. So across the US, average resident has about $10,000 in net worth. The average homeowner has $430,000 of net worth.
10 to $400,000 is a 40x, a 40 times
40x
in net worth, whether you rent or you own your home, GC.
Exactly.
Okay, so this is the gap that you guys are working on.
Exactly. And it's not just that family who becomes a homeowner gets plugged into that wealth.
Yep.
Their future generations become plugged into that wealth. How many are the first person to do something in their family, and then their brother, their sister, their kids, their grandchildren become whatever that is?
Breaking the generational poverty trap. It starts with homeownership in the United States. It's why why Habitat for Humanity exists and all these other nonprofits. JWB Cares is now making a huge dent in it. GC, you told me some eye-opening numbers of the dent you've already made. Tell me.
Yeah.
Tell the people.
So I'm going to give you some stats here. Again, literally about 6 months old. 2,879 JWB residents are enrolled in JWB Homestep. 57 of our residents are currently working towards buying their first home. They're working with JWB Realty to execute the JWB home.
57 folks.
57 folks.
Yep.
9 of our residents just this year have already closed through JWB Homestep and have become new homeowners here in Jacksonville. This is the craziest stat. You didn't believe me when I told you this earlier.
I believe this.
The average amount that folks have brought to closing for the last 3 closings, you know the answer. $0. So we are helping folks not just buy a home with all the services that are needed to help them buy a home, but we're also helping them find down payment assistance and grants. Some of these don't ever have to be paid back for these folks. And so they're able to buy homes in this economy. When home price affordability is a challenge, we're able to help our residents be able to buy homes. $0 to closing for the last 3 closings. Really, really incredible. JWB makes this possible by contributing up to $3,600 through the Homestep program. That $100 a month continues to add up for all of our residents. And so JWB has contributed over $28,000 through the Homestep program just so far this year, just launching it.
Okay, awesome. Just 6 months.
And if you think about this, we actually have had 18 residents over the last 12 months who have become new homeowners. Even before Homestep launched, this is what we do. So 18 residents, if you think about that, that's over $7.5 million of new resident wealth. That has been created just for this generation.
And that's taking that calculation from going from like the 10,000 net worth to 400,000 net worth.
Exactly.
Times the 18 residents in just under a year, officially 9 since the program has started. As an investor in JWB, my head pings and goes, wait a minute, am I paying for this? But I'm not paying for this.
You're not.
This is just coming out of JWB's pockets. It's something that y'all are funding, but it's also incentivizing folks to stay in their home, stay within the JWB portfolio, renting from JWB investors, because every single month they get $100 towards their down payment, plus all this assistance to find extra money to be able to acquire 18 homes and become residents, go from resident to homeowner for 18 homes with an average of $0 down out of their own pocket.
Absolutely. Absolutely.
Okay. Well, I think this leads us to the next thing, right?
Yeah.
I think people want to help with this.
So we're excited to share that update with you. Bigger and better things to come. We'll continue to get you updated throughout the year and as we accomplish more together. But we wanted to do something a little bit even better. And so this year, on the heels of JWB Homestep, we said, well, how can we do even more? And through the JWB Cares Welcome Home Fund, we said, well, we have a real opportunity here. As you think over the years, for those who have been JWB clients and friends and fans over the years, you've heard how we raise a lot of money every single year through JWB Cares, and we build a brand new construction home, and we give that home to a deserving member of the community. Last year, it was one of our JWB residents. And as we were planning this year, we said, well, how can we do more? How can we have a bigger impact? And so this year for 2025, what we're going to be doing is 8 JWB residents are going to receive up to $20,000 in down payment assistance through the JWB Cares Welcome Home Fund. And we wanted to give all of our Not Your Average Investor folks out there the opportunity to be a very big part of that. In fact, what we want is for one of those residents to receive that up to $20,000 in down payment assistance from you all. So what we're doing here, and we're doing this live on the show, we just actually opened this up, but what we're doing is a fundraiser for that $20,000 down payment assistance to go to one of JWB residents, and we would love for all of you to take part in it. So if you would like to be a part of this mission and to help out some family that has never owned a home and now can become $400,000 wealthier over time because of owning a home.
And set their future generations up for success.
This is what you do. We want you to go and donate right now. Go to donate.jwbcares.org.
Link is already in the chat. You can just click on it. Cassandra shared it.
There you go.
Yep.
Go there and donate. And the suggested donation is $100 for you to make an impact and change somebody's life. But I don't care if you donate $1 or $1,000, whatever you can do. This mission makes you feel really, really good when you take part in it. So would love for you to go there and donate and start to change somebody's lives. I was checking. We've got the live ticker up here. Do we have
ticker's on?
the live
ticker's
ticker
up?
All right, awesome. Yeah, so we built this kind of like live ticker thing because again, we're launching it with you all as a part of the community. I thought this could be a kind of a fun thing, and you can see that the donations are starting to come in here. Look at that name up there, Pablo Gonzalez over there.
Throw a little donation right before the show.
Atta baby. We have a few JWB teammates here. I don't even know how the link got shared, but some of our Not Your Average investors actually donated even before the show started. So I wanted to say thank you to, let's see here.
Fairy Godmother, I know, donated.
Jen Filson.
Yeah.
Chris Gonzaga.
Hudson Valley.
That's right.
From there, we got a donation.
John Henning.
The leadoff hitter.
Leading
us off in donations.
There we go. Lily Bigelow, Cassandra Joyner, Cassandra Knatzer, remarried. Some old habits die hard. KJ, who is the mastermind behind a lot of this.
Feeling good when you donate, GC. What do we have to give the first 12 people that donate right now?
There we go. So, guys, we have the most comfy gift you could possibly imagine. For those of you who can donate at least $100, we're going to give you one of these Not Your Average Investor Summit blankets.
We got him here.
There we go.
Did a ship. Oh, Glenn Schenken's getting one.
All right, Glenn's getting one. We have 12 left over from the summit. These things are like the most comfortable thing to lay with.
Super soft. I got one of these from the summit. You just want to rub your face in it. I swear, it's just the most comfortable thing. It could be a pillow. It could be a blanket. It's got the summit embroidery on here. It's just like, I'm warm right now, and this blanket still feels delicious, Greg.
I have like 1,000 blankets in my house. This is the only one that gets used. This is the first one to get snagged by my kids. So support us, join a great cause, know that you are really making an impact, whether it's $2, whether it's $100, $200, whatever you can give.
Look at that.
We would love
from Duval.
Oh, there we go. Bill Shields.
Bill Shields donating.
All right, Bill. We appreciate you, buddy.
He's getting a blanket. So we're going to keep this live ticker up. Parts of the show, we're going to keep refreshing it to encourage you to donate. So far, we've got a couple of blankets given away. We've got some more to go, but at the end of the day, it just feels good to help families plug into the economic flywheel, be part of this movement here in Jacksonville of creating the next great American city and bringing everyone with us. We are not your average investor. Mike Foster with $100.
All right, Mike. Appreciate you, bud.
Foster throwing in there, man. We love it, Mike. Thank you so much. All right. So that being said, we got a couple questions here. Lee Bishop is asking, is the 10% fee going to pay for this for the residents? No, it's just coming out of JWB's pocket.
It's literally that $28,000 that has been contributed by JWB. It comes out of our bottom line.
Throw this back on here. The Maven is giving it
all
up.
right,
I like everybody putting their nicknames in here.
This is the best.
Leslie, the Maven from the mountains of Denver, donating. Lee and the MVPs,
MVPs.
Lee and Jane, of course.
Of course.
No surprise. The ticker is going up. Glenn Schenken is saying, are they buying the home or they're renting? They're buying it, Glenn. They bet to purchase and own their own home.
That's true.
Moving forward. And then we've got anonymous attendee saying, congratulations for the program. You will make the American dream a reality for many. With this home step program, have you thought through applying for a B Corp? You know what that is? That's like the triple bottom line, kind of like B Corp, corporate. Sounds like a no.
No, I haven't thought about it.
Sounds like a no.
But you learn something new every day. I'd love to learn more about it.
So it's an MVB Corp.
Yeah, all right. Well, there we go.
I just made that up out of nowhere. All right. That being said, we are gonna go on with finding the best market to invest, but I'm gonna keep this ticker on as long as I can.
All right.
Is it showing? Yeah, it's showing.
All right.
It's showing. All right, GC. So finding the best markets to invest in rental properties. This is a presentation. We actually made this a year ago. You've updated it with new numbers because now it's 2025. This economy bears its own kind of strategies. That being said, we're going over some real numbers. Investors should do their own due diligence. This is made for informational purposes only. We are not financial advisors. I usually miss something that I'm supposed to say here. GC, what is it?
You just kind of nailed it. I'm not a financial advisor. We are not financial advisors. This is not financial planning advice. And surround yourself with those who you trust when making an important
There you go. You know who I trust? I trust El Maestro. He just joined in.
All right.
And gave us
there we go, El Maestro.
World famous composer and philanthropist now.
And the Queen of Logistics, too.
And the Queen of Logistics jumped in here. Alan and Michelle John. Thank you so much, guys. I love this live ticker thing.
This is great.
This is a lot of fun for me personally. That being said, JWB team is here for you. If you like what you're hearing, you want to start a plan here and invest in rental properties in one of the best places to invest, as you'll learn. Call JWB at 904-677-6777 or text only 904-293-0341. Schedule an appointment at chatwithjwb.com. And of course, the patron Santorios donating $100. Michael Santorios.
There we go, baby.
Deborah Allo donating.
You know who that is? That's my mom.
Of course. How do you not know your mom's name?
Yeah.
So-
Remarried. There you
All
go.
right, there you go. There you go. There you go. All right. All right.
Mom, appreciate you.
Amazing.
I love you.
Amazing. And last but not least, I saw somebody put this in the chat, this idea that they emailed for the quarterly market report. I have you here as not your average guest, so I'm not sure who's actually asking for it, but you can always go to jwbrealestatecapital.com/report and download it, right? So this has the Jacksonville market report that we work on every single quarter. Team puts it together. And now, GC, let's start a little bit before this, right?
Let's do
We
it.
talk about the order of operations. We have talked about, how to avoid making classic first-time mistakes. We've talked about how to avoid, people fudging a deal sheet. And now we're talking about markets. But before that, why do we need to go back into the 5 profit centers of rental property investing?
Well, it is so critical to understand how you're making money. And in other asset classes, it's quite easy to understand how you make money. Some of them are very simple. You buy low and you sell high. Well, in rental properties, there's so many beautiful things beyond just buying low and selling high that you are able to make money. But most investors don't have any idea about this, and it leads them to incorrect conclusions, and they don't see the value that these beautiful single-family rental properties have. So to truly understand the value of this investment, we have to understand the 5 ways that rental property investing pays you. Because what actually happens is the best parts of this investment are on the inside. They're hidden. They're not the things that you see on the outside day one in your bank account. So you have to have somebody help you so that you know why you're doing this, so that you know how you're changing your financial outcomes, and so that you stay in the game, right? We need to have those endorphin hits to understand that this is doing something life-changing for me. And these 5 profit centers, when explained correctly, help folks understand that.
Got it. So I was one of those folks. I didn't understand it. 5 years into hosting the show, I think I've gotten pretty good at it, GC. But when I first started kind of explaining how excited I was to be a part of the show on JWB, and I was talking to people about rental properties, all they brought up was cash flow, cash on cash return, cash, right? People are short-sighted. Yes, net rental income is one of the profit centers. That's called cash flow, but people overcorrect for it. There's also tax savings, the idea that at the end of the year, you can depreciate the asset and save from your taxes based on that cash flow you're receiving. There's principal pay down, the fact that the resident in your home is paying down your loan, and that is a really high floor for an investment to begin with. There's home price appreciation, right, which we'll talk about a little bit more. Obviously, the value of a home goes up over time, especially when you think about a full market cycle. You can that's what people don't understand. They got overcorrected during the Great Recession, and they start to think of home price appreciation in the short run as unpredictable. That may be true, but over the long run, home price appreciation is very predictable when you think about a full market cycle. We'll talk about this, I'm sure, a lot on the show today.
We will.
And then there's inflation hedging, inflation profiting. That's the idea that if your granddaddy bought a Coca-Cola for a nickel back in the day, and today it costs $1.50, well, think about buying a all-you-can-drink Coca-Cola for 30 years, and the fact that like 20 years later, you still only paid a nickel per Coke kind of thing, right? This idea that the value of goods go up over time. If you borrow money in the present day, you're paying tomorrow's prices with yesterday's dollars. Coca-Cola for a nickel, GC. How'd I do there?
You did really well. I mean, you attacked the harder concept there, which is inflation profiting, which you're talking about right there. That's how you're paying back your debt in less valuable dollars, which is a good thing for you to be the borrower. And then inflation hedging is really just the concept that it's not a coincidence that home prices and rents tend to go up at the rate of inflation over time. It's because these are hard assets, and those costs of goods and services going up will equate to your increase in value over time as well. So those 5 profit centers, it brings a tear to my eye when I see you just rattling off those 5 profit centers doing it so well.
Brings a tear to my eye.
What is it?
Our community has already donated
Holy cow.
$1,852 since we started the show.
Wow.
If you want to be a part of this, what's that link, GC?
Donate.jwbcares.org.
Big Papa coming in. We love him.
All right, Big Papa.
We did not plan that. We did not plan that. All right. That being said, GC, I think everybody has this question in mind. Which one of these 5 makes the most money? Which is why we coined the Pac-Man principle. Tell us what this pie graph represents, GC. I will not test you on the colors.
The Pac-Man principle, guys, I get to manage over $1 billion in real estate assets. I look at the reports every single quarter. We share these with all of our clients. And one thing that we see over and over and over again, when you look at a pie chart as far as how our investors are making money, and you look at a pie chart, the pie chart looks like a Pac-Man. And the biggest part of the pie chart is the Pac-Man. That's home price appreciation. So what we see is that home price appreciation is how investors are really making their money when they hold on to the asset. And so home price appreciation accounts for between 60 to 80% of your total returns, which is why it's so important for a training like this to understand how to choose the right market. If you choose the right market, you're going to set yourself up to maximize all 5 profit centers and maximize your wealth. If you don't, you're going to be leaving a lot of money on the table.
Yeah, the health of the market that you invest in is a great piece of that home price appreciation part. So we always hit on it, this idea that 60, 80%, this is just like a typical breakdown. You see rental income here, you see tax savings over here, you see principal pay down here, you see home price appreciation. It looks like a Pac-Man with his mouth wide open. But over the last 5 years, we've done, I don't know, we've probably reached about 100 different portfolios that we've examined, and they all look different. It's just a matter of whether the Pac-Man's mouth is more closed or it's more open. It doesn't matter when you invest. The majority of your returns come from home price appreciation. This is why you cannot underestimate the market in the decision that you are making, GC. So that being said, now that we've caught everybody up, we've had a bunch of new folks join the show. Our old folks, the usual community members, I know that they love this breakdown, but I think what people came here is to get a good criteria on how to pick a great market. So I know that you came up with some ideas. You want to start breaking them down?
Yeah, absolutely. I try to separate myself when doing a training like this to put myself in the shoes of a brand new investor who does not own rental properties yet, but is just starting at square one. What would I like to know if I'm that brand new investor? And I'm kind of an order operations guy. I like to follow a system. And so for me, if I'm a new investor, I'd like to know what to look for before I even started looking at any markets. How could I look at this objectively? And so what I did was I came up with these 6 criteria for determining the best U.S. market to invest in rental properties. And when you know this criteria, you'll understand, hey, do I have something that I should even look more into or not? And so we'll go through these 6, and then we're going to put it into application. And I'm going to show you how different markets rank across the country. And then you guys will get to determine which you think is the best. So we're going to start with rent to price ratio. The reason rent to price ratio, what we're doing here is we're comparing the monthly rent to the purchase price or the market value of the home. And this is important because it's an easy to calculate metric that's going to tell you, do I have a chance of positive cash flow? If the rent to price ratio is too low, you're not going to have a chance of positive cash flow. That's not a market that you want to buy and hold and build a portfolio of single family rental properties. Current population size, that's important because we need to understand that there are ways to mitigate risk in this asset class. One of the ways to mitigate risk is to have a market that has a diverse job base with multiple different economic industries, many big employers, Fortune 500 companies. And there's the easiest way to look at this is if you have a population size in your market of 1 million people or more. Simple, easy. This tells me if I have over 1 million, I have strong economic base, many jobs, many industries. Okay, cool. Check the box. This is something I might want to look more into.
This is kind of like, I saw an article recently about like Cape Coral, Florida, and how it's kind of like taken one of the biggest beatings in this kind of like market normalization. I remember during the Great Recession, kind of like the places that got hit the hardest, smaller municipalities that have like 1 or 2 main industries that tend to be construction or hospitality or something like that, have much bigger swings in the short term, whereas these bigger cities like a Jacksonville with a diverse employer base tend to be much more stable during hard times.
Exactly. You don't want to be, the reason you're probably coming to this asset class is because you're tired of the swings. Yeah. You're tired of one major announcement changing your whole investment strategy and whatever traditional asset class you're investing in. Well, one way to mitigate against that risk is to invest in a large population market. So that way, no matter what employer does something and changes their strategy or shop or what have you, it's not going to change the job base for that market and not going to keep you up late at night.
Got it. So up next are home price appreciation, another criteria. We've obviously talked about that, how important that is, because it makes up such a piece of the pie that it's the Pac-Man itself.
There you go.
And then population growth, I would assume that these are essentially what the current trend is. Is the market trending up or down? If a market is growing, it means that home price appreciation is going to stay equal or go higher. If it's declining, you're probably looking at shrinking home price appreciation.
Yeah, it is a strong leading indicator for future growth.
Median income growth as another criteria. I would assume that that has something to do with what kind of rents people can pay, what kind of, like, can people continue to buy homes there? That's the demand side of the equation, the ability to keep up with that.
Exactly. It's like a scorecard. If you're looking at future looking statements or future looking projections, are people moving to your area and are people making more money in your area? That is a scorecard that you can stack up against other markets. And that bodes very well for everybody to win in real estate, meaning home prices can go up, rents can go up, and people can afford it, which is what you need as an investor so that you can maximize your return on investment.
Got it. And then median home sales price, GC, why is this an indicator? Like, to me, median home sales price just kind of tells me what league I'm playing in, like how much money I need to bring to the table. Why is this actually an indicator?
Well, when you have really high home prices, it's almost impossible to get positive cash flow as well.
Got it.
So it's a easy to measure sign is whether or not you're going to get positive cash flow. But more than that too, it's about how much does it cost to get into your first investment? How hard is it to scale to 3 to 5 to 10 to 20 properties, whatever your goals may dictate you need to have, and so how hard is it to diversify within the within that market as well? So median home sales price, just easy to look at, and I'll give you some guidance on kind of specific criteria is not to go above.
Got it. I am resharing. I can't help but notice that the scroll hasn't moved. So if you want your name on the screen, and hold up that blanket, you see?
Here we go.
On the blanket.
There we
Show
go.
the blanket. You want the name on the screen, and you want to help. Hold on, I'm trying to type while I say this.
There we go.
And you want to help out here.
Does this help? Does this help?
Yeah.
Does this help as your
Oh, got it. You go to, what's the link again, GC?
Donate.jwbcares.org.
All you got to do is click there. You'll see your name on the screen. GC, you're really good at creating these kind of like scorecards of keeping track of the score. But in any game, there's also penalties.
Yeah.
There's also the red flags.
Yeah.
And you're also good at figuring out how to avoid these problems.
Yeah.
What are the red flags?
Yeah. So again, these red flags, if you see these, just don't even spend any time looking at that market. Okay. And the markets that you should be spending time analyzing should have 0 of these red flags. It's not like if you see 1 red flag or 2 red flags, it's something that you should look into. No, if there's any of these red flags, don't look into that market. There's a better market out there.
Got it.
So rent to price ratio under 0.45%. If that rent to price ratio is under that, you're not going to get positive cash flow. The higher the rent to price ratio, the better your cash flows will be. So under 0.45%, you're not going to get it. Just easy math there, 0.45%. And I'm just going to use an example just for easy numbers that's not real. But let's say the purchase price of a home was $100,000. The market value of the home was $100,000. You would need to have your rents. If you have rent under $450 there, you're not going to get any positive cash flow there. So that's how that 0.45% would work there.
And we didn't really explain this, but positive cash flow isn't a bad thing. It's part of the equation. But at the end of the day, we talk about having it be at least positive because that insulates you, right? It's kind of like a de-risking of the investment. If you're negative in cash flow, then you're coming out of pocket month after month. It's going to be very hard to scale it. Plus, it's just like when something goes wrong, and things go wrong in rental properties, it's going to hurt extra bad. Hey, Courtney donated.
Hey, Courtney, there we go.
Check it
JWB teammate right there. Love that.
Let's go.
Our team's amazing.
All right. So the cash flow piece is kind of like the entry to the dance. You want positive cash flow in order for the investment to pay itself month after month, not be cutting out of your active income every single month. Right?
Exactly.
Got it.
It's the entrance to the dance. Just don't go overboard. We all would like more positive cash flow, except if you're giving up a lot in the other profit centers, which is what typically happens. So slightly positive.
The red flags then.
Yeah, current population size under 1 million, it's a red flag. We talked about that ahead of time or just before here. Average annual home price appreciation under 4%. Now here, there are markets that have for decades grown more, had more home price appreciation than others. And we understand those markets. It's where population has grown.
The cities that everybody have made a name for themselves over the
So
last 10 years.
a lot of that stuff isn't going to change, guys. People love the weather in Florida.
Yeah.
You know, like quality of life, like in other places in the country too, where people move, it matters. And where it shows up for you as an investor is what is your average annual home price appreciation rate. The thing about this is I said under 4%. The average home price appreciation rate across the country over the last 40 years is 4.6%. So don't get tricked into thinking that just 0.6% or 0.8% or 1% below that is not a lot, because when you're talking about $150,000, $250,000 assets here over 10 to 20 years that you're going to be holding these things, 0.5% matters a lot. So you want to be at least above 4% to be even in the discussion. If it's less than that, that is a low or no or slow growth market, and you're going to end up leaving a lot of money on the table there.
Cool. So that's the HPA red flag. What about this median home sales price, GC?
Yeah, you know, anything $500,000 or above, just a non-starter. You're not going to get positive cash flow there. I mean, really, things, you know, over 400, you're probably not going to get positive cash flow. You know, you have to, it's really tough. So just say, if it's over 500 grand, don't look at that as a market that you want to build a rental property portfolio.
Correct. Got it. Okay, GC. Then if those are the red flags, then how do we want to think about this? How do we start rating markets?
Yeah, I think so many of us, because we're, you know, we want to be number one. We want to be winners, our market to be number one. And there's so many lists out there that are produced by folks that don't generally know much about real estate. And they'll say, oh, this market is number one for this, number one for this. When you are building a highly profitable rental property portfolio over the years, you don't want to be number one. Because if you're number one in one category, guess what you're number 99 in another category?
Yeah.
Well,
Yeah.
I answered my own question. Thanks. I saw your question and how you're going to answer that one.
Yeah, I was really confused.
So it's about, what are you giving up,
Mhm.
right? So it's not about being number one. What you want is to find the market where you are in the top half of the country
Mhm.
the most. So it's about being above average the most rather than being number one, because as you'll see here in a few minutes, being number one in one category leads to you being way low on some other very important profit center.
Yeah, I remember the first time we did the show with the 2024 numbers. I kind of got sucked into this analogy that I'm going to try to stay out of. But if you got a daughter or a son and they're marrying someone, right? Like, they have the option to marry the person voted most athletic, or the person most popular, or the funniest, like myself, or maybe they can marry the guy voted best rounder, best all around, right? Smart, good athlete, really nice to people,
all right,
funny,
let's
handsome.
go. Let's move on.
Best all around is what you're looking for when it comes to investment.
Man.
So normally, if you're number one in category, like in my high school, the guy that won best all around wasn't also best looking Funniest. I was funniest.
Yes.
There was Alex Casabiel was best looking. And then Clay Bishop got best all around. I'm not bitter about it, but I'm just saying my mom was like, why weren't you that guy? So you would have gotten better made. So why don't we just go into what these top markets are?
Oh man, thank you. I'm so glad we're moving on now. Oh man. All right. So I did all of the research here, guys. I have access to data for all the top 99 metros out there. And it's pretty cool for us to look objectively at what markets are doing well at some things, and then how do they do at other things. So the highest home price appreciation market over the last 40 plus years is actually San Jose, California. Probably not too surprising.
Not too surprising. Silicon Valley,
Right? And so here are the numbers for San Jose, California. If you're a new investor and you're saying, well, I want something that's going to appreciate a lot, maybe I'll think about San Jose. Well, here's what you would find for median sales price, appreciation, rents, all of these good things.
Median sales price of a cool $1.9 million.
Million with an M.
Holy cow.
Median.
Yeah.
Median sales price.
Yeah, median sales price.
So, I mean, clearly that jumps out. I bolded some of these because they jump out, right? You can see the U.S. average is right below, so you can have some comparison and perspective there. And then everybody knows we invest in Jacksonville at the bottom. So I want you to see what we see when we advise folks to invest in Jacksonville as well. But just some noteworthy things about San Jose.
Noteworthy things, I assume, lead to some red flags.
There you go. So the red flags for the San Jose market would be high purchase prices, which you hit on, and negative cash flow. And if you go back to that previous slide there, I know that negative cash flow because look at that rent to price ratio.
Too doesn't sound real good.
Right?
What was the line of demarcation? 0.45?
0.45.
0.45. So half of that.
Yep.
Got it. Okay. So San Jose, maybe best student, voted best student, right? Highest home price appreciation.
Yeah.
They're going to go work for Google, but not best all around.
Not best all
All
around.
right. So let's talk about best rent to price
All
ratio.
right, let's go the other side. So our highest rent to price ratio market in the country is Detroit, Michigan. Okay.
Okay.
Detroit, Michigan. What do you think about that sales price compared to San Jose?
Dude, I'll take a dozen of these.
Yeah.
155K. That's real low.
I would love 155,000. Well, look what you're giving up. Look at the home price appreciation there and the rent price appreciation. It barely made that 4% thing, but just by a whisker. And that rent price appreciation is well below the national average as well. And so you get a ton of cash flow, comparatively speaking.
Really nice rent to price ratio, a lot of cash flow.
Yeah, but look at population growth. Look at median income growth.
Yeah.
Look at median incomes compared to the national average, right? This is the epitome of a low or no or slow growth. I can't decide which one I want to call it. Slow growth.
Like I cook my ribs.
Right? So this is a market where you feel really good about the cash flows, you know, but you leave all this stuff on the table and you don't realize it until you invested for 10 years or 20 years and you call up Pablo, who's investing in Jacksonville, who didn't get as much positive cash flow, but his wealth pie, his wealth pie is a lot bigger. You know, you want to be like Pablo, right? Your wealth pie will be a lot bigger when you don't leave money on the table through growth.
This is like falling in love with most athletic. 20 years later, guess what? Those muscles are tearing. You're not able to run so fast. It's way less impressive when you're still, you know, haven't moved up in your career. You don't have all the things, right? So maybe rent price appreciation in Detroit might be most athletic right now, which is why they make such good Super Bowl runs lately. All right, let's talk about highest.
That's really good. I can't wait to see what you nickname the next one. All right, so highest median income growth. New one. This wasn't here last year. You know, obviously these things these change as I rerun the numbers. So highest median income growth, Visalia, California.
Visalia.
I had never heard of Visalia.
Is that where the onions are from?
Maybe.
Maybe.
It is a big ad. So I looked into Visalia because look at this. This is California.
Yeah.
All right. It's about 3-4 hours from LA-ish.
Yeah. I would assume this is going up into like beyond the San Bernardino Valley towards like Bakersfield.
And is it the San Jacinto
Valley?
Yeah.
Maybe.
I looked into this because I had never heard of Visalia. And I looked at the numbers.
Mr. said is Vidalia is the onions in Georgia. I was way off. Visalia. All right. This sounds like a pharmaceutical.
It's not pharmaceutical. All right. And I know this because well, a few things that I'll share with you here. So median home sales price, California market.
Yeah.
$365,000.
That seems cheap for California.
Really inexpensive,
Really
right?
inexpensive.
And your rent to price ratio, really good for California, 0.52%. That's pretty close to US average and right there for Jacksonville as well. So I looked at it, I was like, wow. Well, what's happening is they've had nice median income growth, but look at population. Here's the risk. Right, it's a highly agricultural area. It is inland. It is not where people want to move. So population is not growing there, and it hasn't grown, and it's not likely to grow, which again limits your growth of your investments. So that would be the red flag for Visalia.
This screams to me the typical town where people are moving away from the city because they're looking for cheaper home prices, somewhere within a 1.5 hour drive or 2 hour drive of some kind of like metro center. And it reminds me a lot of kind of like the places that got hit hardest during the Great Recession. The ones that are getting hit right now is these like kind of like boom towns where people are kind of like moving away from high class.
It never boomed.
It never boomed.
It never boomed. And I'm not a Visalia expert here. I did a little bit of cursory research here before, but if you do a Google search on it, you'll see that people have not moved there. People are not moving there in droves, which is surprising for California. And it doesn't have a lot of the things I read that, you know, they have a lot of challenges with just the climate there and, you know, more than you would have on the coast of California. I don't know. I'm not an expert here, but all I can tell you is that people aren't moving there and they're not likely to move there too, because we see population growth has not increased.
This feels to me like most artistic, right? Like a wonderful quality to have. You have this big moment when the big play happens and you get the lead role, but then most of the time people just kind of like forget about you. And I don't know.
I don't think they ever were the lead in the play. No, that's what I'm saying. You're trying to create something here.
Low income. Anyways, I'm going to keep going with the all right, highest population growth you see.
All right, Myrtle Beach, South Carolina, the highest population growth in the country. Over the last 10 years, population has grown there 35%, which is impressive.
That's a big one.
Right? Low median home sales price, $360,000. 60. We like that. They have nice home price appreciation. Rent price appreciation is where we need. Rent to price ratio. What's the big challenge here?
Population size is under 1 million, way under 1 million.
Yeah. And the percentages can kind of get easier to accomplish when you have a very low population size as well. So don't know if that's going to be sustainable. I would imagine it will not in future years, but we're starting from a really low number. So even if you are increasing at 35%, how many years would it take you to get to 1 million? It would take you a lot.
If they were to add 100,000 people, they would grow by like 20%. If Jacksonville was to add 100,000 people, they would grow by 7%, 0.7%, something like that, right? Like 7%.
Yeah.
We're at 1.5.
Yeah, 1.8 million people. Yeah.
1.8.
Yeah, I don't know.
All right. Don't do math in
Public
public,
math.
folks. That being said, red flag here is a population of less than 1 million. What was this one? This was called highest median. No. This was highest population growth.
This was.
I don't know how to compare.
Most popular?
Most popular. Most popular.
There we go.
Most popular. By the way, I came really close to winning that, but I won funniest.
Yeah.
All right. So that being said, how do these markets rank in the USGC?
All right. Remember, our goal here is to find the market that is above average the most. All right. It's not number one. Right. And so what you're seeing here is all of these markets that happen to be the best at one of these criteria. And how do they stack up? I went and I looked at the top 99 metros, and we're able to see how they stack up. So the numbers in bold are the ones where you're in the top half.
Got it. So like you said, when you're number one in one, you're 99 in another, right? Like San Jose is number one in home price appreciation, but they're 99 in median sales price. Detroit might be number one in median sales price. They're 96 in population growth. Visalia is number one in median income growth. They're 70 in population growth. Myrtle Beach, California, number one in population growth. And they got a couple other ones. I guess the lowest one is that, but they don't cross the line of demarcation of 1 million. Right. So that's a throw it out of the water. Right. Like, and then we've got what I like to call the Gregg Cohen of the cities here, the best all around.
I'm not following that path.
Anyways, Jacksonville here breaks the line of demarcation on both 12th in population growth, and then top half on all the other ones that really, really count. Right.
There you are. This is the only market in the country that has all six. That all six of this category. So, obviously I'm biased. All of my rental properties are here. That we advise all clients go to Jacksonville, but I hope that this objective viewpoint helps people see how we have landed here. And it's not just that we've landed here, guys. You guys see, we invest millions, tens of millions of dollars of our own money every single year into this market. So every single decision that we make is reinvesting. And why do we do that? It's because we believe this is the best market to invest in the country. And then as you are thinking about your markets, right, start to look at some of this criteria. Now, you guys don't all have the same access to the numbers that I have. I totally understand that. But you can get this information for free if you start doing a little bit of digging. Yeah. So I know some will have other questions about other markets.
Yeah, Darren Seaman is actually asking, when comparing markets, where can one find the data? I assume JWB purchases data that not your average investor may not have access to for free, GC. So you guys, I know you lean heavily on John Burns. That's not a cheap service. Other places to go. I feel like nowadays with ChatGPT and Perplexity and like all the AI stuff is probably easier to get this data as well?
I'll give you a few sources that you can go to that will give you this data. So the U.S. Census for population, that's an easy and free one. The Federal Reserve banks produce their own economic data, and they'll have home price appreciation rates. The Federal Housing Finance Agency, before we started purchasing our data, I would use that. I would rank every single market out there. Yeah. So Federal Housing Finance Agency, another free service that you can look at. Home price appreciation. Realtor friends that you have should know about the market that you're investing in. Yep. And you might be able to compare that to maybe a national average that you might see on ChatGPT or Zillow or something like that. So you're going to have to hodgepodge it a little bit together, but do the research before you're going to invest hundreds of thousands, maybe millions of dollars into something. Do this research. And if you are comparing, let's say that you are on the doorstep of making a decision to invest in Detroit or Indianapolis or wherever that you're thinking about investing, you want to compare it to how it would work in Jacksonville, that's a great time to get on the phone with JWB. Yeah. Put this out there. We are not prepared to prepare market reports for every market in the country. If you call up my team and say, hey, can you prepare a report for Sheboygan? We're not going to have that. Okay. Sheboygan. But this is a great way. If you are thinking about your decision, get on the phone with an expert and we can pull some of that data on that specific market that you're looking at and help you make the best, most informed decision as well. So just give our office a call, 904-677-6777. Text us, 904-293-0341. What? Hey, there you go. You're so good, Vanna.
There you go.
Text only if you, there's a real human on the other side too. If you just want to text us, set up a time to speak with us or have a quick question, you can do that. Or you can schedule an appointment where we can sit down and chat with you. You go to chatwithjwb.com.
I got an update for you, GC.
Yeah?
We just had one more donation from
Master. All right.
Drew Barnhill.
And we're over 2,000.
Over 2,000. Community is still giving.
Oh my gosh, you guys are amazing.
And it just kind of brings up the, I'm gonna go back to kind of like these 6 different criterias, just so everybody can kind of take note of this as we continue talking about it. Actually, I don't know where to find the stop share. That being said, GC, we had that slide. It shows that Jacksonville is part of, is the only one that ranks in all 6 of those, right? In the top 6, the next best was only 4.
Mm-hmm.
That's not even accounting for this idea that Jacksonville has this moment that's happening, right? This like downtown thing that we talk about a lot on the show. If you're a member of the community, you've heard this a bunch. If you're new here today, there is something really significant happening in Jacksonville where our downtown has kind of been a sleepy downtown. And the technical term for a sleepy downtown is an 8-hour downtown. It's a downtown where people go to work and then they leave. So it's kind of dead on the weekends. It's kind of dead after like 5:30 p.m. And we are right on the doorstep of becoming a 16-hour downtown, meaning people are going to live, work, play there. And the way that gets defined generally is when you cross a 10,000 resident density inside the urban core, then all these developer incentives that are needed to get people to build downtown go away because now people want to build there because it has the requisite mass of demand there. And Jacksonville, who has been slowly climbing up it recently, is now about to cross that threshold. And what's the research that you've done that proves that, GC?
Yeah, we see that revitalized downtown cities that cross this 10,000 resident threshold living downtown, those revitalized downtown cities appreciated 89% more than the national average since 2005. So we can look at what cities have done that have undergone this transformation. We understand what to measure to see the next city that's going to do that. And we can even define when is the right time to invest in that city before it pops. Yeah. And so what we did is we looked at Nashville, Austin, we've looked at many of these cities. And what we have found for Nashville, I believe it was 7,300 residents is the time that you could have bought single family, you could have bought single family rental properties before that curve did this and still gotten all 5 of these profit centers before the run up.
Yeah.
Nashville is the highest appreciating market in the entire country since 2005. Yeah. So if you could have said, you know what, there's one market in the country to buy cash flowing rental properties in 2005 and buy as many as you could, it would have been Nashville. Yeah. Well, 7,300 residents was the jumping off point. For Austin, it was 7,600 residents living downtown. That was the jumping off point, and we know what a success it has been. Well, guess what, guys? Jacksonville is at 7,600 residents right now. Yeah. And we are close to crossing that 10,000 resident threshold.
Units being built in downtown will already more than create the amount of people living in downtown in under the next year and a half, right?
JWB's own development downtown, which is the Gateway Jacks project, we believe that project will actually cross us over the 10,000 residents living downtown threshold. So we're excited for so much, but how cool would that be if that our actual project is the one that spans it. So guys, even if you take this out of the equation, what Pablo has just shared with you as far as what's coming down the pike, just take that out of the equation. Just think of that as icing on the cake, the cherry on top. That is how you get your edge. Even if that wasn't there, what the data has shown us is that Jacksonville is the most balanced market out there, which balance equals profit maximization over those 5 profit centers.
Love it. Love it. Speaking of what the data shows us, that we have a generous community. Kate Sutherland coming in.
All right,
Kate. On the Non-Traffic Invest Show. We've now crossed 22 supporters donating to the cause, helping people plug into that economic flywheel here in Jacksonville that we're all building, that we're all investing in, that JWB is kind of like one of the shining beacons leading the way of the economic development engine here in Jacksonville that we all get to partake in. And now our residents get to partake in it too. So speaking of the downtown, Next week we've got
Oh yeah.
next week we've got
You know who we got next week.
I know who we got next
You know
week.
who.
We got the guy that is building the most significant project downtown, the Pearl Street District. It is why don't you describe the Pearl Street District for me, GC?
So what we have seen in other successful downtowns, there's a catalyst project that drives that growth. Well, JWB about 5 years ago started to go down this path of creating this catalytic project, and it's called Gateway Jacks. And what we did is we bought over 20 city blocks in downtown Jacksonville. We then went and raised over $230 million. So we found the land, we found the money, and then we needed to find the team and the leader to bring us to that vision. And who we found is a gentleman named Brian Mole. Brian was in charge of the Water Street development in Tampa, which is one of those revitalized downtown cities. He led a $4 billion development in downtown Tampa, which if there are any folks from Tampa, I would love for you to chime into the chat and tell us how awesome downtown Tampa is.
I was just in Tampa.
There you go.
Like a little bit over a month ago, and I was like, holy crap, am I in Miami right now?
It's awesome there. And I grew up in Orlando mainly, and so I've known Tampa for my whole childhood. Yeah. Nobody was ever saying, oh, hey, let's go to Tampa to hang out. Yeah. Now, everybody is talking about
like 7 years ago, that area that is now like super cosmopolitan was just like 5 parking lots.
Exactly.
Essentially. Exactly. So Brian's coming, he's coming back to the show. He's been on the show before. Mm-hmm. He's been with us live at the summit before, right?
Yes.
Show the blanket. Show the blanket.
There we go.
The summit that produces these delicious blankets, and just a really well-spoken, he's a true city builder. He's done it in Tampa. He's done it in DC. You guys were able to convince him to come to Jacksonville. He saw the vision. Now the vision is being built. We got shovels in the ground.
Gosh.
We're going to talk to him about kind of the progress. We're going to talk to him about the other things that are happening around. Generally, this is kind of like a momentum builder, right? So once you start breaking ground there, other folks gain the confidence to start doing things. Things like the UF campus that's coming and all the other great projects that are kind of like surrounding him now with him as this like gravitational ball of energy. It's going to be and he's going to be in studio.
He's going to be in studio. We are so lucky to have him in our city. We're so lucky to have him be on the show. I mean, this is a gentleman who's in charge of $2 billion in development. Yeah. How often do we get the opportunity to talk to somebody who is making decisions of $2 billion of development in the city that you're probably investing in?
You usually just get to talk to $1 billion in development.
Come on. You were really pumping me up today.
I miss you, man.
I've missed you too.
Okay, we got a not your average guest saying, Greg, do you invest anywhere elsewhere in real estate other than Jacksonville, either directly or via syndications?
I have a few syndications with some partners that I have, but not in single family. So these are multifamily or commercial syndications that I've invested in. Very small amount, and it's really with trusted partners. But all of my single family assets are right here next to you.
To the tune of about 400 homes, right?
Yes, a little over 400 homes.
So you're invested mostly in single families in Jacksonville right here. You see the vision, you see the flywheel. Mm-hmm. That's what you're betting on. Yep. That's what JWB's built on. Great show today, buddy.
Hey, man, this is a lot of fun. And thank you all for giving us the opportunity to talk about HomeStep. This is such a community win. What I find is that, listen, for an investment to make sense for you, the numbers have to make sense, but it's got to be so much more than that for you to invest for 10-year, 20-year relationships. And that's what we get to have with our clients. And to reach that threshold, this investment needs to make you feel good. You need to know that somebody on the other side is also winning, and to know that your residents are winning by renting your homes and the way that we treat your residents, to know that they're winning there. And they have the opportunity to take that leap to jump into that wealth creator, which is home ownership as well. And we're going to make that easy. Mm-hmm. You all are a part of all of that success. So thank you guys for giving us the opportunity to share about the success of HomeStep. And thank you guys for donating over $2,000 just in the hour that we got to spend here today. It warms my heart. I super, super appreciate it. It's about the most fun thing we get to do on the show. So thank you guys.
Awesome, GC. I'm super inspired by the action taken by the community. I'm super inspired by folks that just show up, right? Like being here week after week, taking an hour of the middle of your workday to come here, ask great questions, donate to these causes, build your economic flywheel yourself, influence people like me to become like you. It's really been an unbelievable journey. GC, any last words of advice before next week?
Don't be average.